Hi everyone, I'm Ava, and today on Your Financial Journey, we're going to talk about debit versus credit cards. Most Americans carry both in their wallets, and both of these cards are ways to pay without cash. But what are the differences between them, and when should you use which? Today, we're going to be answering those questions. More specifically, we'll explain what debit and credit cards are, the differences between them, and which card might be better for you. Let's get started. What are debit and credit cards? First things first, what are debit and credit cards? A debit card is a payment card that takes money directly from your checking account to pay for things. When you set up a bank account and put money in it, you'll likely get a debit card connected to it. You can use that card to pay for something with money directly from your bank account, saving you the hassle of having to withdraw cash. If you do want to withdraw cash from an ATM, you can use a debit card to do that too. If the ATM you use is in-network, an ATM from your bank or a friendly bank they have an agreement with, there shouldn't be any cost to this. For example, if you have your account with a credit union, your debit card might allow you to withdraw cash for free not only from your own credit union's ATMs, but from other credit unions as well that they have an agreement with. But if the ATM is out of network, not connected to your bank and its network, there might be an extra fee you have to pay. So if, for example, you have your account with Bank of America, but use a Chase ATM, you may be charged a fee for the withdrawal. A credit card, on the other hand, is a card that lets you borrow money to pay for something now on the condition that you'll pay the money back later. That means that when you use a credit card, you don't actually need to have the money that you're spending in your account. You're really always taking out a loan, even if it's only a small amount, for say, ice cream. But every month you'll receive a credit card bill with the total amount of money you've spent through your card. This is essentially the outstanding balance on your credit card loan, which you'll need to pay back at some point. If you pay that bill back in full and on time, there will be no cost at all on the money you borrowed for this short time, which is great. The flip side of this is that if you don't pay your credit card bill back fully and on time after you get the bill, you will be charged interest on the remaining balance of the loan that you took out. And here's the catch. There's often a pretty high interest rate that's applied. In fact, as of the time of this taping, the average credit card APR, or annual percentage rate, is 20% or more. The danger with credit cards' high APRs is that it can result in lots of debt that keeps growing at high rates. But this is only a risk if you're overdue on your bill. Remember, if you can pay your credit card bill back fully and on time after you receive the bill, you won't have to pay any interest at all. And you can take advantage of your credit card's rewards program. Most credit cards have some sort of program that gives you rewards for using it, giving you some of your cash back in the form of deals or points for things like airlines or hotels. You can also use a credit card to withdraw money from an ATM, which is called a cash advance. But most credit cards impose a fee for this. The fee for a cash advance usually ranges from 3 to 5% of the amount you withdraw, with a minimum of $10. In addition, most credit card issuers charge a higher interest rate on cash advances than purchases. And interest can start accruing immediately, which means you may have to pay interest on the cash you took out, even if you repay your credit card bill fully and on time after you get it. That means that credit cards are an expensive way to get cash, and a big contrast from debit cards, which let you withdraw cash for free from in-network ATMs. Which leads us nicely to the next section of this video. What are the differences between debit and credit cards? Now that we know what each card is, here are 6 key differences between debit and credit cards. We already touched on some of these before, but let's go through the whole list now. Our first difference is about the money used for each card. When you use a debit card, you're paying with money you already have, while when you use a credit card, you're borrowing money to pay for something. Remember, debit cards take money directly from your bank account, while with a credit card, you borrow money from your bank or credit card provider. That leads us nicely to our second difference, the debt you can accrue or rack up with each card. With a debit card, you're using money that you already have in your account. So far, so good. But that means that if you were to overdraw your account, or try to use more money than you actually have in the account, the transaction just wouldn't go through. The debit card would be declined, as the industry calls this. Now, in actuality, many banks offer a service called overdraft protection that allows transactions to go through up to a certain limit, even if you don't actually have the money that you need for them in your account. Let's look at an example of how that works. Let's say you want to use your debit card to buy books for $100, but your account has only $60 in it. Instead of rejecting the card and not paying the merchant anything at all, the bank would pay the merchant the full $100 that you charged on your debit card. You still have $60 in your account, but that leaves a gap of $40. If you have overdraft protection, there are now two options for what the bank does to find the missing $40. The first option is that it will take the money from another account that you have with them, such as a savings account, and the problem's solved. But if you don't have sufficient money in another account, then the bank will turn to the second option and charge you the missing $40 as a loan. And that might be to your credit card, or it might open a new overdraft loan against you for $40. And if the bank does charge the missing $40 as a loan, you will, of course, have to pay interest on it, just like with any borrowing. And on top of all that, your bank may charge you an overdraft fee for having to arrange all this. In some cases, up to $30 to $35 per transaction. So it might cost you a bit of money. But at least you can buy your books with your debit card. As of 2025, federal regulations require banks to give customers the option of opting in and opting out of overdraft protection programs. You can opt out of overdraft protection and avoid the risk of overdraft fees, though at the cost of potentially having a transaction with your debit card denied. But if you opt into overdraft protection, you might accrue debt from overdraft fees. Credit cards are a bit different. By definition, you're always going into debt when you use your credit card because the money is borrowed. But that isn't necessarily a bad thing, like we explained before. Remember, if you pay your credit card bill on time and in full, there will be no interest at all. But if you can't pay your credit card bill in full and on time after you get it, that's when interest will start to be charged. The specific interest rate you'll have to pay is dependent on which credit card you have, but also on your credit score, which is essentially a prediction of how likely you are to pay a loan back on time. Credit scores can range from around 300 to 850, and the higher your credit score is, the more likely you are to repay your loan on time, the better a rate you'll get, and the less interest you'll pay overall. Like we mentioned, credit cards have an average APY of 20% or more at the time of this taping. And if you don't pay the interest when it's due, that unpaid interest is added on top of the loan and increases your outstanding balance. It compounds, as the industry calls this. That means that if you don't pay a credit card bill back fully and on time, debt can quickly accumulate and grow. For many Americans, such credit card debt is a real issue. Our third difference between debit and credit cards is about ATM withdrawals for cash. Generally, debit cards are the better option when it comes to ATMs because they have less fees. If you use an ATM that's in network with your bank, you should pay no fee at all. But if you use an out-of-network ATM, you'll likely have to pay extra. Credit cards almost always have additional charges, regardless of which ATM you withdraw money from. Like we mentioned, using a credit card to withdraw cash from an ATM is called a cash advance, and fees are often significant. The fourth difference we have between debit and credit cards is about the protections you have in case of fraudulent activity. And here, credit cards can sometimes be a bit more consumer-friendly. For debit cards, liability depends on how quickly you report fraudulent transactions. By law, your liability is limited to $50 if you report within 2 business days. But the longer you wait, the greater the amount you're responsible for. If it takes you over 60 business days to report a fraudulent transaction, you might be responsible for 100% of your loss. But for credit cards, The maximum amount you'll ever be responsible for is $50. Many debit and credit cards even offer zero liability fraud protection under some conditions, such as having used reasonable care in protecting your card from loss or theft and promptly reporting loss or theft to your financial institution. So liability for fraudulent transactions may be an aspect to do some extra research into before choosing a specific debit or credit card, given how much fraud there can be. In fact, my parents have already had to get new cards at least twice since moving back to the US about 10 years ago, because someone was using the old cards fraudulently. But they had zero liability fraud protection, thankfully, so we didn't incur any losses, except for the inconvenience of having to get new cards issued. And the fifth difference we have between debit and credit cards is about rewards programs. Some debit cards have point programs, but not all of them do. And the debit card rewards programs that exist tend to have limited benefits. But when it comes to credit cards, almost all major credit card providers offer rewards programs that may be worth comparing. Many credit cards give you the equivalent of 1 to 2% of your spending back in the form of cash or rewards points. Some will give you back even more in specific categories, like eating out, gas, and/or groceries, and over time, these rewards can add up. You might be wondering why rewards programs for credit cards are much more generous than for debit cards. And the answer is because credit cards make much more money for the banks, both from the interest they charge and from the fees that the merchants pay when they accept a payment by credit card. The banks simply share a part of these fees with their customers. Debit cards, on the other hand, make the banks much less money. They charge no interest to their customers, and they charge lower fees to the merchants. So there just isn't that much revenue to share. Moving on now to the sixth and final difference between debit and credit cards: credit history. Debit cards will usually not help you build your credit history. Your credit history is important because it tells businesses how you handle money and pay your bills. It can impact whether you get a credit card or loan, as well as how much interest you'll have to pay in interest on the debt that you borrow. And in some cases, your credit history can affect whether you get a job or rent an apartment. Credit cards will help you build your credit history. Take a look at this video here if you want to learn more about how to check your credit report and see what your credit history looks like. Now, there are more differences between debit and credit cards, but these are the 6 main ones that you should know and that you'll want to consider when deciding which one you'll want to use. Which brings us to the next section of today's video. Which card might be better for you? To help you decide whether a credit or debit card might be better for you, we'll go through when it might be wiser to use one versus the other. A debit card might be the better option for you if you have trouble with overspending. With a debit card, you're using the money you already have in your account, so you can't spend too much more than you earn. If you overspend and opt out of overdraft protection, your transactions won't go through at all. And even if you do opt into overdraft protection, there will be a limit on how much more you can spend. With a credit card, though, you might spend more than you can pay back and go into debt. Yes, credit cards have limits on how much you can borrow as well, but these limits tend to be quite high and will still allow you to rack up quite some debt. And with those high interest rates, that could cost you a lot of money. So if you're worried about spending too much and accumulating credit card debt, a debit card might be the way to go. Debit cards are also the better option for withdrawing money from an ATM, since there are less fees, though it does depend on your specific debit card provider and the ATM you're using. But the fees for using a credit card to withdraw cash from an ATM are usually much higher. On the other hand, a credit card might be a better option for you if you know that you won't spend more than you can pay back. If you're confident you'll be able to pay your credit card bill back on time and in full every month, you can reap the benefits of credit cards without having to pay the high interest rates. One of these benefits, and perhaps the main reason many people prefer to use credit cards, are credit cards rewards programs. These points or cashback programs can save you a bit of money and get you extra savings you wouldn't get with a debit card. Another benefit is the increased consumer protection that credit cards might have in case of fraud. Like we mentioned earlier, with a debit card, you could end up being responsible for your entire loss. For a credit card, though, the maximum amount you'll ever have to pay for fraud is $50. And remember, credit cards help build your credit history as well, as we touched upon earlier already, while debit cards don't. A credit card could also be useful to give you the flexibility if you really need to buy something but don't have enough money in your checking account right now to pay for it. You could borrow money through your credit card, and assuming your next paycheck arrives before your credit card bill, pay the money back then. Note that while this is an option, we'd usually recommend against it. If you really need something but don't have the money for it yet, a credit card can let you pay for it. But this puts you at risk of not paying your credit card bill back on time. If this were to happen, interest would start to accumulate, making it harder to pay off your credit card bill every month. And these higher bills might make it even harder to afford things during the month, leading to a vicious cycle of having to use your credit card more and more, which in turn would lead to more and more debt. But this is only a risk if you don't pay your credit card bill back in full and on time every month. If you have no trouble paying for it, that's great. You can enjoy the benefits of a credit card without the pitfalls. If you do have trouble paying off your debt though, please refer back to this video here to see how the debt avalanche method can help you crush your debt. Moving on now to the final advantage for credit cards that we haven't mentioned yet. If you use rental cars or if you travel a lot, especially in foreign countries, then a credit card will make your life much easier. Credit cards will be required by all major rental car firms and accepted almost all over the world, while debit cards just might not always be that straightforward to use for renting a car or while being in a foreign country. And of course, it's not necessarily all black or white. Many people, my parents included, carry both a debit card and a credit card in their wallets. So you can have the best of both worlds. The debit card for free cash withdrawals from in-network ATMs, and the credit card for rental cars, foreign travel, and last but not least, the rewards program. So my financial friend, which do you prefer to use? A credit card or debit card? And why? Leave a comment below to let us know. And like and subscribe if you enjoyed the video. Thanks for watching, and we'll see you again next time.